Okan, welcome back to F.A.C.E. Was looking forward to talking to you
Okay.
today.
How are you, Dale? Thank you. I
Good.
just turned on my microphone. Thank you.
Okay. Your mic's loud and clear, crisp. Did you want to share your screen today, Okan?
Yes, I would like to share my screen with you.
Okay. And Okan is a CTA. If you guys don't know, that's a regulated advisor, commodity trading advisor. So, if you have an account with the CTA, you have the regulators watching over the manager's shoulder to make sure they're, doing all the right things. Segregated accounts, which, has really become an important thing to have and be with the, where do you clear your business as a CTA? With everything that's going on in the crypto world, where you have your money is becoming as important as how you trade your money. So, Okan, are you there?
Yes, I'm here. Which is that a question? I
Yeah,
missed.
it's a question. You're a CTA, so you have accounts. Just curious who you clear your trades through.
Okay. I've been working with StoneX on the future side. I don't trade foreign exchange.
Okay.
But I like.
What's the name of the clearing firm?
StoneX.
Oh, Stone. Okay.
StoneX, yes, and that's
Yeah,
a
so
well-known brokerage company.
yeah, they're out of Chicago, right?
Yes, and
Okay.
they're also, of course, they are regulated.
Right.
And
They're also the other advantage is they're a member of the exchange. They're a clearing member.
yes,
And if there's ever a problem, the exchange, people don't know this, but if you're who you clear as a member of an exchange, the exchange actually guarantees funds if there's ever a problem with the clearing member. So you have the whole exchange behind you, something to consider when you're opening accounts. So the share screen's at the bottom, Okan.
yeah, I'm looking for that facility to see how I can share my screen with you. I'm
Okay, you
looking
roll
at
your cursor down near the bottom of the screen and you'll see a green box.
Oh, okay, I got it. I see that right now. Okay, now here, there you go. I have four
Good.
slides to share with you today, and
Okay.
I would like to talk about the dollar index versus the gold-silver ratio and the 2 years minus 10 years U.S. Treasury yield spread, because they're all related to each other. Well, the thing I want to share with you today is that, first of all, as I mentioned you earlier in my previous meeting with you, I mentioned that the gold-silver ratio is very well correlated, positively correlated with the dollar index. And if you look at the screen, you're gonna realize that the um, the reddish, not the reddish, but
The orange?
the orange one, yeah, the orange line and the white lines, they move together. And not on a daily basis, of course, but on a general level, they tend to move together. They like to move together. So this is one given observation about these two pairs, the gold silver and the dollar index. Now, what I do here is basically I use the 2 years and the 10 years treasury yield spread, which is you subtract the 10 years yield out of the 2 years treasury spread and you get the number. And when you draw the chart of it, which you will see on as a purple line, you should be realizing that when this chart increases, the dollar index increases as well as the gold silver increases. However, if well, this chart that we are looking on at is starting from 2012 till 2022. It's like a 10 years time period. But over the past, if you look over the past about 6 months or so, notice that the gold silver ratio and the
Came down.
yeah came down, and the 2 years and the 10 years spread of the treasuries has gone up. So this is interesting because one of them is not correct. Well, I believe that when you look at the market dynamics, there's a better chance that the 10 year spread, I mean the 2 and 10 year spread, is going to fall, because simply because the 2 years treasuries may fall, due to the fact that the inflation numbers that are coming are not as hot as before.
Okay.
So, um,
Can, can I just
so
clarify something for myself and maybe the viewers? Are you saying the correlation is when the gold silver ratio is heading down, that is bearish the dollar?
that is the
And when
yes. It
it's
means
and when
it's
it's heading up, it's bullish the dollar.
exactly. So
Okay.
the gold silver ratio, when it goes up, it means it's bull dollar, because notice that the gold silver ratio and the dollar index move together, right?
Yeah.
And even in the last year, even if you just look at the last year, the right hand side of this chart, the very right hand side of the chart, you should notice that the gold silver
Dollar
ratio and the dollar index have been moving
down.
together. Yes,
Yeah.
yes.
All right. Are you looking
Whereas
for it to dig its heels in here and recover uh, the gold silver ratio to start heading back up and the dollar?
I believe that the gold silver ratio is at the right place, but the 2 years and the 10 years treasury spread should be falling, which means the most probably the 2 years U.S. Treasuries yield should be coming down, and I think this should be true, given the fact that the latest price data, which is inflation data, is coming down. If you realize that they are not as hot as 2 months ago or a month ago, and if you look at the ISM numbers, the price index of the ISM indices, the same thing is true. The price indices are falling. They're not increasing as before. So
So what's actionable? Do you buy the gold silver ratio here, which is a CFD, or do you buy the dollar for a bounce after its big slide? Or are you looking to do something with the 2-year note that
I
hasn't manifested that direction?
well, I would imagine actually selling the dollar, but not right now, because the dollar has already gone down, uh, as you see in the last few weeks.
Yeah.
So there should be a correction coming for the dollar index, which means the dollar index should go as high as maybe up to 108 again. And
Okay.
that moment could be the time when you can short the dollar index.
Okay.
This is what this chart is telling me. And especially if the purple line, which represents the 2 years and the 10 years yield spread, if they begin to fall, that's going to be a very good sign that the dollar index, it may likely fall too. But
Okay.
again, for the moment, I think that the dollar index has already gone higher enough to
Major
make a
high.
reasonable correction. So it's not the right time to do that, but wait for at least about 2.5% increase in the dollar index before you short it again.
Okay. So looking for a correction after this fall in the dollar.
Exactly. And
Okay.
also, if you allow me,
And
there's
gold
next.
silver ratio.
Yeah, exactly. That's
Okay.
same. It's going to be the same.
All right.
And there's also one more thing I would like to share with you is what do you look at when you do this trade? I would suggest that you look at the personal income and wages as well as the productivity data. What I mean by that is if I move to the next slide, and here you go. Just look at the, if you realize that from January 2022 till today, the average hourly wages have been going up like non-stop, right? So it's
Right.
there's
But
no volatility.
productivity is falling.
Exactly, but the productivity has been falling, and that's the reason also why the inflation expectations have not been going down for some time, and this is actually what is the concern for the Fed. But look at the very last data where you'll realize that the non-farm labor productivity is not falling as before.
Right.
Now it's actually increasing just a little bit. See, so we can assume that in this case that the the fall of the productivity has stopped and now it's rising gradually. And the fact that it's rising gradually is also an indication that the inflationary pressures are fading. So
Let
this
me ask you
and
this. I think, this is something that is worth thinking about. Why has the CPI and PPI moderated? Is it because there's some economic weakness behind the scene and we're only looking at inflation improving when part of that reduction is the economy beginning to slow and the demand destruction is having an impact?
well, I would say both of them, but um, mostly the fact that the Federal Reserve have been increasing the rates has influenced the market such that the the unemployment begin to increase. So when the unemployment increased, after it increased, it is normal that the labor productivity goes higher. So that's normal. So this increase in the labor productivity is also represented. Oh, I mean, it also represents the increase in the unemployment.
Okay.
So the rise in the unemployment cut the demand, of course, and also the rise of in the interest rates has also cut the demand for housing. And when this happens, uh, from one end, the demand falls. On the other end, the productivity increase means that there is less, I mean, pressure for inflation from the supply
Okay.
side. So
Does this
from
give
the
you more of a risk on belief than risk off?
would you repeat again, please? I couldn't hear that.
Would this give you more of a risk on belief than a risk off? All this
Oh,
information.
okay. This looks like a risk off. This
Okay.
looks like a risk off, and this is the reason why I am agreeing with the gentleman who mentioned that the S&P 500 may be rising in the next few weeks and months to go.
Okay. Okay. So,
So,
but that's risk on.
oh, this is how you mentioned if well.
Yeah. If people are buying the S&P, they're buying risk.
Okay. So if you see that,
Okay.
right,
When
okay,
they're, when the market is selling off, it's risk off.
okay, I got it. Well, that
Okay.
I didn't know that. I just thought that risk
So
of
let
maintaining.
me ask you, because I'm trying to, extract it from you. With this information, how are you positioning your clients in the market?
Okay, I tell people who follow my newsletters that I would suggest them to wait before they go long. They go short on the dollar. And I also suggest people that people should be waiting to do some energy trades, especially energy spread trades, but remain silent until things get a little bit certain. So that's what I am doing at the moment.
Okay. So you're waiting for a rally to sell the dollar,
Correct.
and you're waiting for the right time to buy energy.
And that's what I would like to explain to you in the next
Okay.
slide,
Sure.
if I may. Um, when I move to the next slide, Dale,
Okay.
I'm going to show you an interesting chart. Um, okay, the blue line here represents the hedge pressure spread between the gasoline and the heating oil. The hedge pressure means that when the refineries produce the product, for example, gasoline or whatever product they're producing, they tend to sell that product in the futures markets as a way of hedging. So they sell futures contracts. And who buys the futures contracts is the speculators buy. So this means whenever refineries increase their production, every marginal production is hedged by the refineries by selling short um, to the long speculators. So in that case, the speculators begin to purchase futures contracts from the short hedgers, from the refineries. So if this activity increases, what happens is the long positions of the speculators, the large speculators, begin to increase. And what I do here is I look at the hedge pressure of the gasoline and I subtract it from, sorry, I look at the hedge pressure of the heating oil and I subtract that number from the hedge pressure of the gasoline. And when I do so, I get this blue line seen on the chart. And this blue line basically represents the hedge pressure spread between the gasoline and the heating oil. So gasoline minus heating oil hedge pressure. And the shaded area on the chart represents the gasoline price divided by the heating oil price. So it's gasoline heating oil pair, if you like. Okay, and they move together. You see, they like to move together. And what is more important is hedge pressure spread of the gasoline and heating oil is actually leading the gasoline heating oil spread. So hedge pressure spread of the gasoline and heating oil is actually leading the gasoline and heating oil price spread, which I find very valuable because it is leading basically. So after providing you this information, if I may move to the next slide.
Sure.
The next slide is showing you the last 3 years time frame, where we have the hedge pressure spread of the gasoline and the heating oil shown on the red line, as you can see on the red line, and also you can see on the yellow line, you can see the spread of the gasoline and heating oil. Okay, so this is this is basically showing you this relationship in the for the last 3 years. This is what is showing us. And when I look at the last decade, every time the hedge ratio, I mean hedge spread ratio between the two commodities, between the gasoline and the heating oil, fall towards the end of the year, and they tend to rise in the first quarter of the next year. So, so this means that if, for example, if in the last 3 months, if this ratio has been going down towards the end of December, then most probably, well, I would say out of I tested it, and 10 out of 14 times it has been true that this spread continued to increase from January till March of every year. So I'm talking about the probability of it.
Pretty good.
So,
Pretty good odds.
so this suggests that, well, when I look at the data of today, I see that this hedge pressure spread has been going up, not down. So this says to me that the probability that the spread, the hedge ratio spread, will increase from January till March is decreasing. So it doesn't look very good. In that case, if you're trading gasoline and heating oil spread, I would suggest traders not to jump into gasoline starting from January, but wait at least until end of February before they go long on the gasoline and short on the heating oil.
Okay.
So that's basically what I would like to share with you.
Well, I appreciate because definitely tell a lot of thought and work and time goes into what you presented us today, Okan. We learn from everybody, and yeah, I hadn't thought of the correlation of the gold silver ratio and the dollar before, but seeing it visually, I learned something from you today, and appreciate you being here and sharing your work with the community. Best way for people to get in touch with you or follow you, would that be your Twitter handle?
Yeah, sure. My Twitter handle is my first name and last name all together,
Okay.
followed by the @, Okan
Okay.
Aybar.
Okay.
Yes.
All
And
right.
I will continue to share this kind of charts in the coming weeks.
And you also write a newsletter?
Yes, I am writing the newsletter in the local language, but I will start writing newsletter in English, and I'm gonna start sharing it with you. When I do so, I'm gonna let you know, so you can let your community, and they can follow it.
All right. Well, my trading warrior brother, I'm rooting for you and your trades, and actually on the same side of the trade, looking for the dollar to give some back. So thank you very much, Okan, for coming here and edifying our community.
Thank you very much, Dale.
I do believe that one of your countrymen who could read your letter in current form is asking for the link to read your newsletter. Erdem Yildirim is asking for that.
Oh, okay. If you can
So there are,
contact me,
we do have Turkish speakers.
Yeah,
we have a very international community.
Yeah,
and we all love each other, which is different than the world, because we all share the same goals here: to slay the market without being slayed. Oh, and he's one of your former students.
Oh, okay.
Yeah, so you should know how to get a hold of him then.
Yeah, he should be. He can contact me directly.
All right.
And I
Anyway,
want to tell you, Dale, that you know, I always feel very lonely when I look at the markets and make my assumptions and my analysis. But when I hear people saying and thinking the same thing, even the opposite, yeah, I feel I feel less lonely. So I must tell you that I'm learning from you too. So thank you very much
oh,
for
you
this
know,
community.
you may even want to consider hanging out with some like-minded people at ForexAnalytix in their chat rooms. I mean, there are many people where this is their vocation, not a hobby, and they're interacting all day long. If you're lonely and you also want to share your views and see what other people are thinking, it's a pretty good
Yeah,
mastermind.
that
Think
that will
about it.
be really great. Yeah, I'm gonna look at that.
Okay.
Yeah,
All
thank you.
right. So thank you again, and good hunting. And we'll be talking down the line, Okan, and have a great holiday season, and be talking to you next year.
Oh, sure.
And
I
don't be
talk to you next
lonely.
year.
Don't surround yourself with like-minded people. And
Will do.
I talk to them every day, and pretty large active community. So
Sure.
that's a wrap, everyone. Don't forget, don't just count your pips, count your blessings, and you could be with the team in 15 minutes on the morning edge. We'll see everyone tomorrow. Good hunting the rest of the day. Thanks again, Okan. You're welcome,
Thank
Paul.
you.
You're welcome, Bhavana. So people are thanking you, Okan.
Thank you all. Thank you
All
very
right.
much.
All right. Take it easy, buddy.
You too. Thank you.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.